Hi traders, and welcome to the Technical Analysis Market Wrap on the 4th of February. So we've seen some pretty good market movement on a few of the majors this week, and also the indices are starting to actually rock and roll as well. So we'll jump straight into the chart and see if we can identify any trades for today and early into next week. Okay, we'll start out here with the Aussie USD as we always do. We can see that it's at a very strong roll reversal zone. So we can put a horizontal line here and actually really mark out exactly what we are seeing. You can see that we've had very strong support through there and this area here around late last year. And it's finding itself there with two big indecision candles yet again. So this is the daily chart, of course. So we've got the 20 moving average bearing down on it as well. So there's a lot of resistance right in front of it. Apart from the roll reversal zone, we've got the 20 moving average, which is rejected off twice. And also, if we can do it, I will actually draw up a fib for this particular trade. I normally mark body to body for the Fibonacci retracement, and you can see that that actually also coincides with the 61.8, which is actually the last line of defense on the fib. Ballistically, it's at the point, if it's going to reverse, this is the place it is going to reverse. If it breaks through this zone here, you know it's broken through a very, very strong resistance zone. So it's very, very important to understand exactly where it's at. If you are going to go long in this area, you need to know that it needs to clear up past these very important 61.8s, roll reversal and 20 moving average on a daily chart before you can actually start getting excited about going along on this one. So really, with an indecision candle as such, I'll zoom it in a little bit. You can see here that it's basically a perfect doji. Really, we've got the high and the low very similar to where the open and the close is. So there's been a lot of market movement throughout that day, but nothing actually transpired by the end of it. So realistically, we need to go to the smaller time frame to identify what's going on here. We're either going to get a series of higher highs and higher lows, which will give us the opportunity to go long on it, or of course, if it goes down lower, which is probably the preferred trade. There's more saying that it's going to go lower than it is higher because of all of the resistance in front of it. So of course, the preferred trade here would be to see it do a lightning bolt to the way down, which is a series of lower highs and lower lows, and then we'll be able to short it down to around that 70-cent mark. So good trading, I think, on this one. It's just a case of waiting waiting for the confirmation of the lightning bolt, more importantly. And we know we've got a very, very clear target to aim for, which is what we like most about these sorts of trades. If we can get it down to that 70-cent mark again, we know that's a very, very strong support. And of course, if it does break through this resistance and starts to trend higher, we know that we can start aiming for that 72.90, 72.80 area, which is the next real point of roll reversal again. So really, really good trading on this one, just waiting for the opportunity to get that lightning bolt in either direction. All right, the next one we'll have a look at is the US Dollar Cad. This is very similar, but basically in reverse. I am going to draw the fib again today. I'm going to use the fib quite a bit today because we've got a lot of very key levels. And although generally when you do know what your fib levels are, you don't really need to draw it. I think for the example, I will show you just so you know what I'm looking at as well. And it makes a bit more sense for the TA. So, obviously we know this level bounced up very, very strongly. We've seen weakness this week on the daily chart. Now, again, we'll draw the fib and we draw it again from the close and the opens. Okay, we don't worry about all of the noise between the wicks. And you can see this one's actually a bit of more of an aggressive pullback down to the 38.2. So realistically, it is a bit of a roll reversal, not as strong as the other one. You can see that we had resistance right through there. But yeah, nothing to really write home about. You're not going to get overly excited. But what I do see here is, two moving averages effectively flatlining, and it's sitting right on top of them, and at a 38.2 Fibonacci pullback, which is actually my favorite pullback. The 38.2 is the one that I like the most because it's the one that makes the most amount of sense. Okay, so realistically, we can see that we've got very, very strong support. We've got MACD about to go into positive territory. Pretty much is really. So it tells us that the 12 is above the 26, which is great. And the histogram is about to start rising. So really, really good momentum on the side of the long. You can see that we've got that all happening in spades. We go to the smaller time frames and we can see a bit of a flat line. But again, what we're seeing is price hovering on the 50 moving average. Now, although MACD doesn't really back it up, it doesn't really matter as much on the time frame that we're probably going to be entering on, which is around this time frame. We'll go one time frame lower on the 1 hour to give us a bit more of an insight. MACD is flatlining here. No surprises there because obviously the moving averages are doing the same. But Again, it's a really simple movement. All we're wanting here is a change of trend on the smaller time frame. We can start with the 1 hour. If we get a series of higher highs and higher lows and we get that lightning bolt that we're looking for, we start to long the CAD. And that goes in the direction of the major trend, which is really what we want. We want to see, momentum moving in the direction of the prevailing trend. And the upside is where that prevailing trend is. So that would be a really nice move if we can get the lightning bolt, break above these levels here, a close above the 127.20, and we are good to go to around the high 27s in the first instance. And if we go out a bit further, of course, we can start aiming for an even higher move up into the 128.50s. Okay, so that's the real target that we're going for here. But in the initial target, we're going to go for the previous high, which is a pretty good scalp in itself. So very, very strong level here. Look for that reversal. Now, if it goes the other way, of course, and we get a lightning bolt all the way down and it breaks past all the Fibonacci zones and everything else, then we start looking for the shorting opportunities. And that next shorting opportunity is going to come in the way of the next support zone, which is around that 126 area. So also some reasonable scalping on the way down, but of course the preferred trade is on the way up because that's in the direction of the prevailing trend. All right, we'll go over to the US dollar yen. We'll start out on the daily though. We've had a bit of a resurgence over the last little period. We can see here that we've pulled back to the level that we broke through a couple of weeks ago. It's above the moving averages again. The moving averages are still trending higher. So for all intents and purposes, it's still looking reasonable for the long. Now, I didn't really like that it didn't make a higher peak here. Ideally, in a strong market, we want to see higher peaks being made, but I am forgiving it and giving it a little bit of leeway, mainly because of this one here. It was a previous resistance, and it was very close recent resistance. So no real surprise to see it break here, so I do forgive that. It's come back to a level where you would have effectively looked for the trade to get in. Not a bad area to get in at all, and you can see we've had a very strong day. Very likely target to get to the 115, sort of 50 area in the first instance, and then up to the previous high at 116. So good scalping on both sides here. You can take the shorter term trade or the longer term one. If you go to the 1 hour, you can see here that we've had that touch or around this area here. Once it did the mini lightning bolt, we were off, and the 4 hour is starting to paint a similar picture. If it comes back and touches these 20 moving averages and starts to look long again, I think we can get a pretty good trade here. The long still looks like the way to go on this one, mainly because it's got a lot more work to do to get down. Really, for this to be a short trade, again, we need to see it break below the 114 on a daily chart. And if it does that, then look, we reconvene. We have to, obviously assess what's happening at that point. But the majority of the momentum looks like it's long, and it is sitting above the support. So once something is sitting above the support and looking like it wants to go a bit longer, it's easy to take that trade because that's where the easier money will be made. But of course, we're going to watch for the lightning bolts. We always let price action dictate the way, and if indeed we do get that close, we're going to see a bit of a sell-off. If we get the close below the 114, we're probably going to see a bit of a sell-off down to that 113 again. So good movement either way, but I think the upside looks more lucrative because I think it's got the easier levels and it's got a little bit more momentum on its side. All right, so we do have to be mindful that it is non-farm payroll Friday because, of course, it's the first Friday of the month. So, the market movement is probably going to be a little bit slow throughout today's trading in the Asian session, but it might certainly pick up and get some momentum around the New York Open, especially around the non-farm payroll announcements. So just be very mindful of that we may see a little bit of quiet action throughout the next 12 odd hours, and then it will start to pick up, and we could see the volatility, we could see these blasts through these levels. So just definitely keep that in mind. We'll move over to the dollar index now. Dollar index has been very, very weak. As you can see, the evening star has played out now and completely shorted past this level. We've got the close below the 95.50, which is not pretty. I mean, it's the candle still open. If it closes down here, the weekly candle is going to be the teller on this one, and I think we can't really know that until obviously non-farm payroll comes out. So we go to the weekly chart again on this one, and we can see that if this candle closes the way it does, it's going to look pretty ugly, that's for sure. It's still sitting technically at support, even though it's broken down past the level that we've got here. I mean, that level could easily be moved down here, and it could still make sense. You can still see here that this is a very strong support for it. Obviously, we would expect that support to play out again, coupled with a 20 moving average and a 200. But look, this is definitely the last line. If it breaks past here, it's going to look very, very ugly potentially next week. So what we want to be doing is paying a lot of attention to the weekly close on this one. It's about the only thing something we can do. Again, we don't expect a lot of movement today until New York opens, but in New York close will be a very, very important close. It'll tell us the good idea of the direction for next week's trading, that's for sure. So just keep a very close eye on this one, and we will look at it and reconvene after the non-farms. Monday will be the teller. If we get a good close or a big rejection this week, it's going to bode very well for a strong week next week. But of course, if it closes around, it probably don't really want it to close around this level because it doesn't really tell us any more, but it does tell us that the support is held. But if it closes below the support, then it's going to probably see a pretty strong euro next week. So we've got to be very mindful of that. Okay, we'll move over. Speaking of which, we'll go to the euro now. You can see we've seen that strength, obviously helped by the weakness of the dollar index. Again, though, it is a very strong level of resistance here. You can see here that the 114 sort of 35-40 area is giving us the problems, but that really coincides with what we're seeing on the dollar index. So not really much to see here. It's a bit of a wait and see. We can see that the morning star in this instance has played out, but that pattern's already played out straight into resistance. Okay, so if you traded that, now is definitely the place where you want to be taking profit on that pattern, and it is obviously at a resistance zone. So really, it is a bit of a watch and see on this one. If we see any sign of weakness in the coming sort of few hours, especially in the Asian session, we could see potential pullbacks down to around that 113.80 area. That's probably all I would expect before non-farm actually comes out, and that will probably also coincide with what we're seeing with moving averages. You'll see that on the 4 hour, we've seen a very, very big move, but the 1 hour is probably the better guide. If it pulls back down to that 113.80, that'll be about a 20 moving average pullback. So not a bad level to either get back in or actually take profit if you are shorting it. So let's move over to the ASX 200 now. Look, this is an interesting one. We've got a bit of basically an evening star pattern playing out at a point where I would have probably expected to find a reasonable amount of resistance, mainly because of the role reversal zone through here. It didn't quite reach it, and it probably sold off a little bit prematurely, but at the same time, we are again on a non-farm payroll day, and we are going to be dictated to by what happens in the US, of course. So realistically, this is a bit of an interesting one. What I'm going to do, I am going to draw a Fibonacci on this one as well. Again, body to body, and really what you'll see is it actually sold off at the 38.2. So you can see here that the evening star was right on the 38.2 fib from the last swing. Okay, so a pretty key zone, and realistically, this little bit of weakness is no surprise. Look, I don't expect much from this today, but I think the fireworks may well start during the New York session. And next week, I think we'll get some consolidation and either a directional break either down to the previous lows again, or it may start trending higher. But the key line in the sand here is the 71.30, the level I've got drawn up here. And of course, the other level of 6,900. If it breaks down and closes either above or below those two key levels, I think that we're going to see a bit of a trend continuation for the next few weeks. There's no worries about that. So certainly an interesting one. Pattern played out really nicely, but a very, very important zone that it did sell off on. The 38.2 can't be understated how important that pullback actually is. So a really, really important one. The last one we'll have a look at is the S&P 500. This is a bit different in itself because this Fibonacci, if we draw this one, you'll see that it's actually quite a bit of a deeper pullback. You can see here that this one actually went all the way to the 61.8, and it was a little bit more disjointed than the Aussie 200. So you can see we've got a little bit more going on here. We've seen quite a big rejection from today's sell-off throughout that session, but now it's starting to trend a little bit lower and hover between the 20. Again, just be very, very mindful of a pretty quiet 12 to 14 hours on this one, but New York could certainly fire it up. We know that we're at a very strong level here. We can see that just through the previous touches. Okay, you can see here that we've got very strong resistance, strong support, and now we've seen a weakness. It's tried to break through there. It's basically a really ugly evening star out of 61.8, the last point of real resistance from a Fibonacci standpoint on that swing. So there is a fair bit of weakness sort of brewing in this area, and this is what I'd be looking out for. For it to go long, in my mind, it has to close above the level here. So to go long on this particular trade, it has to close above 4,600. Failing that, I wouldn't be considering that because I think there's just too much weakness here that's evident. Now, if it fools us and actually doesn't go and close up there, that's a different story altogether, and then we can start looking at longs for the 4,700. But really, the trades are probably on the way down at the moment. You want to be looking for that lightning bolt on a smaller time frame, and you get that, and we can start targeting these lower lows again. So it's going to be a very interesting night of trading once non-farm comes out, and definitely setting up for some good moves next week. All right, so I hope everybody's had a great week's trading. I think we had some really good opportunities in the currency space and in the indices space. Hopefully you were able to get some good advantage of those. Have a great weekend. I look forward to seeing you next week.